Today we're going to go a little bit back, or for many of you, it will feel a bit like going back, That means the very origin of what we're actually doing here, right? And that's called price action. We call it PA for short. This price action, or really what it fundamentally is, or how I personally perceive and interpret it, or how I have thoroughly grasped and understood its intricate movements over time, or more generally, my comprehensive and evolving view on the dynamic nature of price action as such, which is a crucial element in market analysis. It has a lot in common with technical analysis. So it's basically the development of the price, right? That means someone already observed that the price on the chart has a certain development. And they found some recurring characteristics that just keep happening over and over again, always the same. And for these recurring things, which are kind of predictable in advance, and we notice that they behave quite similarly, and there's a high probability that if this happens, then that will happen. That's exactly what trading strategies are built around or created for in some way, right? And that's where technical analysis comes into play. Like, technically, if I see some HS, some head and shoulders pattern, then technical analysis says that when that forms, it's a reversal pattern, and the move is usually at least 1-to-1 compared to the size of the pattern, and so on and so on. Yeah, that's what these things are. But actually, all of it comes from price action. That means how the price behaves, how the price develops, right? And for me, and not just for me really, most according to the statistics I've looked at, most traders or trading tools specialize in breaking through some zone, the so-called breaks, breakouts, and this style of trading, because for many people it's readable, understandable, clear, and they've observed it in some way. And that's probably why it's the most traded strategy, even though there are different techniques. But I've taken my own approach from it. Everyone picks out their own thing from these breakouts in some way. Some people enter immediately, some on the retest, and so on. Those various specifics change, but it's about the breakout of a certain zone. That means when it just hits some other zone and breaks through it, the market tends to continue moving in the direction in which it broke through the zone, and so on. It's just a much more complex, a significantly more complicated topic, and I'll really try to simplify it, truly break it down into easily digestible parts so that even complete beginners can fully understand it, okay? That means these various price developments and double tops, double bottom patterns, basically the patterns we trade, and even others we don't trade, were observed by different traders, researchers, analysts, whoever it may be. And they noticed that in some way the price can be predicted. And once you can predict something, that something will happen with a certain probability, then you can also somehow profit from it. And again, it depends on how well the strategy is constructed, how well it's back tested, whether it only worked in the last month, or if it's been working for a year, 10 years back. Simply how robust the strategy is, how resilient it is to various influences in terms of market chaos and so on, right? It's not just about something working for a short while, like if something works for a month. So I build a strategy on that. It's good to test all these things over the long term before you put in your own money or any financial resources. And that's what these different strategies are built on. So for example, we have a strategy, I don't know, BRES, which means a breakout of a certain zone followed by a retest. And again, we arrived at this in a certain way, noticing that the price behaved in a certain predictable manner. And very often what happens is that when a zone is broken through, the price goes back to retest the zone that was breached. It gets supplied with more orders. And only then does it somehow shoot up or bounce the price somewhere. And that's one of my main strategies, the BRES, which I have incorporated into my plan and in some way try to trade accordingly. That means it was based on the fact that the price was developing in a certain way. And very often, when I look back and the price breakout has already happened, it behaves in such a way that sometimes it just takes off immediately. But most of the time, again, it's made up of those probabilities, you know? It's more likely that it will test that zone and then go up. The least likely scenario is that it turns into a false breakout. So that means there is a certain probability of that happening, but it's not the majority case, you know? That means one candle breaks through, the next one returns back into the structure, tests the zone from below, and then it goes down. Even this kind of strategy, even this scenario has been observed and can also be traded. It's about trading a false breakout of a certain zone, and it's possible to trade it. It's hard to tell on that first breakout of the zone area. At least I can't tell whether it's going to be a false break or not. I believe there are plenty of specialists out there who can recognize it. I'm not one of them. So I wait for those X candles, those X hours, depending on which time frame I'm on, for a slower pullback or throwback. And only then do I trade to avoid that false or potentially false breakout. But since it's a low probability, I could still trade it successfully, even if I didn't wait, you know. That means I could just wait right after the breakout, set up my entry right there, and I would still be successful. But I'm aiming for some efficiency. That means when I do something, I really want to believe in the trade and make sure it's more probable. So I look for more of those probabilities in the market. And I pay attention to the various patterns I've learned, which are exactly what's contained in price action, in the behavior of the price, the development of the price. So that I can potentially eliminate some risks. That means when I see that something is about to happen or that a certain pattern has just formed, it already tells me something and can either warn me away from the trade, or on the contrary, it can tell me, yes, that's the right perspective. Even this pattern has really confirmed your thesis, the one you have in your technical analysis, right? So actually, the very beginning was some kind of price development. Then some strategies were applied to that. And those strategies have certain rules, and it's necessary to follow those rules. If you follow the rules, it's assumed that you choose a certain strategy and it has a certain probability, and you'll be getting closer to the probability of success. It's not really anything difficult. Of course, if you just do whatever you want and it turns into what's called a mess, then you're no longer trading your own strategy, but rather trading on whatever feelings you have. I'm not saying that your feelings are necessarily wrong. It's just that you're no longer trading the strategy. And it's important to realize that you can't then say the strategy doesn't work if you're not actually following it. So that's just a little note about the very basics of price action. People actually know it as an English word. I don't know if people are really able to explain to themselves what it's actually about. So this is my interpretation of what I actually do in those theses.